Volatility easing in the market today, but tariff disruptions to the global economic order may be here to stay. Joining us now to discuss is Charles Dallara. He is the former CEO of the Institute of International Finance. He is currently the chairman of the board for Partners Group USA. He helped design and implement the Plaza Accords, among many other things, over the years. Charles, it's great to have you back on Overtime. Welcome.
It's great to be with you, Morgan, particularly after a day that's fortunately been somewhat calmer than much of the activities last week.
Yes, it has definitely been calmer. I am curious, though, more broadly, given what we have seen here in the last couple of weeks, and given the fact that you have weathered a number of market and economic cycles, and you have been on the forefront of certain financial crises we've seen over the years, how you would categorize this moment we're in right now?
Well, it's a very critical moment because I think we're not only dealing with an issue of tariffs, but we're dealing with broad questions, Morgan, as to whether or not the U.S. is intending to turn away from the global trading and financial system that has been built under U.S. leadership for the past 80 years. It's not at all clear to me that that's really the intention. But if it's not, then perhaps it would be very prudent for Secretary Bessent to make clear that we're trying to address unfair trading practices. We're trying to solve some serious economic imbalances here, but we're not trying to walk away from Bretton Woods. We're not trying to isolate the U.S. from the rest of the world economy, because I think the anxieties and fears which have been generated are not just around the tariffs, although I think that's the heart of it, but I think it's also around the broader questions of what this portends in terms of President Trump's strategy toward the global economy going forward, and whether or not he still sees benefits in working with our allies and working with the multilateral institutions and in building a stronger U.S. economy that perhaps is part of a freer trading system than we've had before, but one that is still integrated into the rest of the world economy, Morgan.
I think you raise a very key point that I don't think we've been touching on the nuance of enough, and that is isolationism does not, the restructuring we're seeing of the U.S. economy does not automatically equate to isolationism. It does raise a question, though, and I realize the devil's in the details here as policy evolves on a quite literal daily basis. But if you do see this restructuring of the U.S. economy right now through trade and potentially, probably through other fiscal measures here in the U.S. as well, what does it mean for the global financial system and how that responds?
Well, I think it depends largely on how this policy is handled over the next 90 days. I think we've seen so many twists and turns in tariff strategy here that we're not exactly sure what the end game here is. It to correct unfair trading practices, especially in countries like China, where they have certainly been prevalent? Or is it to really establish some bilateral trade balances across the globe, which is utterly impractical? I mean, all countries have certain comparative advantages in producing certain products. And there's no inherent benefit to any country or any individual from having bilateral trade balances. The advantage really is to have an open trading system where countries compete on their own comparative advantages. And I think if that's what President Trump is trying to eventually get to, and that's a good way to renew the strength of the global economy, then I think it's so important to clarify the end game here and to move away from the notion that a higher level of tariffs will somehow reinvigorate the U.S. economy, because I think that is not going to be the case. In fact, it's already threatening to damage important sectors of the U.S. economy here. And I think we know that we benefit on the whole from an open and thriving global trading system. We have benefited for many decades, and we can continue to benefit because we have a strong dynamic economy. And as my friend Mohammed El-Erian pointed out, it's also important to reassure countries around the world that we can maintain confidence in the dollar, that we can maintain functionality and stability in our bond markets, and that we can maintain an open capital system, an open flow of investment on which we depend very heavily from other countries.